And we are live. Hey, everybody. What's up? What's up? It's Coach Dimitri here. Mr. WTF could not make it. He was signing some deals on a golf course today. So, yeah, he's taking care of some executive business, but the show will continue to go on. What's up, everybody out there? Today's broadcast, today's live stream. It's going to be about volatility. And it's not going to be as long as our normal live streams normally are, around 30 minutes. I'm going to make it a little shorter. It's going to be to the point. And it's going to be about cryptocurrency. I know we get a lot of feedback and a lot of questions come across our network about cryptocurrencies. And for those of you who have been following the market, you'll know that we are currently in a bull run. And before I jump into the meat and potatoes of this talk, go ahead and hit that like button, hit the subscribe, hit the share, because you don't want to keep all this good information to yourself. Share it with your friends, share it with your family, and make sure y'all take some notes and rewatch this later on so you can allow the information to settle in so you can really understand what's going on. I know y'all are smart. However, this information for some of you may be new. So, without further ado, let's jump into the topic. All right. So, let me go ahead and share my entire screen so we can see what's going on here. All right. So, first and foremost, I want to make sure that we get some definitions squared away. All right. So, we have to define what volatility is. All right. And this is going to all tie into us being able to create freedom for ourselves. All right. Now, volatility is, in essence, the wild price swings up or down in any particular asset class. I mean, I'm sure you can find some more specific and more techie definitions, but I like to keep things simple, right? Why make things complicated? So volatility is the amount that a price goes up and the amount that a price goes down in a given period of time. So those price swings are volatility. And I'm showing you all this image right here on the screen to further demonstrate what volatility is. And what better asset class to demonstrate volatility than cryptocurrency? And the king of cryptocurrency is currently Bitcoin. So as you see right here, this chart goes from 2010, 2009, 2010 up until roughly present day in 2024. Okay. Now, as you see, these these prices go from 9 cents in 2010 all the way up to $1,200 and 38, excuse me, $1,238 in 2013. All right. But then it crashes all the way down. It falls all the way down to $686 over the previous 2 or 3 years. Right. And then once it kind of settles down at the bottom, then it just rallies from $700 all the way up to $20,000. Then it comes back down to 6,600. Then it goes up to 68,000. Then we're down to 18,000. Now we're back up to around 70,000. Woo! That's a roller coaster, right? And I know many of you are saying, "Darn it, if I had just bought into that doggone Bitcoin when it was 9 cents, I'll be a millionaire right now." Would you really? Would you really have held it all the way to where it is now? Some people may have, but most, if you are a savvy investor, you would have done right and taken profits at the as the price was going up, and then sold at the top or close to the top, and then bought back, at the bottom. But most people don't buy low and sell high. They tend to do the opposite. They tend to get euphoric and they tend to get in their feelings and they tend to get emotional when the price is going up, and they tend to buy, and they hold the price. They hold the asset until the price continues to fall, and they're like, "Oh, well, I thought the price was going to continue to go up. But as you see on this chart, we have a lot of ups and downs. It's like a roller coaster. But one thing that I want to point out to you all is the long-term trend, right? So in 2010, we started off at 9 cents. Today, we're at roughly $70,000. In between there were some heavy price swings up, some heavy price swings down, but the overall trend is up. So what does that tell you? In order to be successful in cryptocurrency, me speaking from experience, you must have a long-term vision. And you must understand that this is a very, very new asset class, even though it's been around for roughly 14 years or so. It's still very new, considering that the stock market has been around for hundreds of years. Real estate around for as long as people have been around, right? Shelter has always been a hot commodity. But I want you all to look at this. I want you all to look at this comparison right here. I know I mentioned real estate. I know I mentioned homes and the stock market and everything like that. And I don't even know if this is the right one. And it is. Okay, so how does Bitcoin compare to other asset classes? So I know you all are like, Bitcoin is a little risky. I think it's a scam. I would rather invest in gold, and I'm right there with you. I am a gold owner myself, but since we're focusing on trying to retire ourselves and trying to double our money and flip our money the most efficient way as possible, let's take a look at the numbers. Let's take a look at the percentage return on our investment year by year, just to really see a comparison between digital gold, which is Bitcoin, and physical gold, right? So you won't see any data before 2010 because there was no crypto before then. But as you see right here, every single year, pretty much, Bitcoin outperforms gold. I think the highest year that gold had a return was like almost 30%, not even 30%. Whereas Bitcoin, the first year it came out thumping 9,900%. How many people do you know that get 9,900% return on their investment? All right, so let's just kind of skip to last year, 2023. Gold did 12% return, whereas Bitcoin did 156% return. So my end goal for seeing their returns and comparing the returns of Bitcoin and the returns of gold, and I'll show you all the stock market as well and real estate. I think it's on that sheet. Is we want to make sure that we're able to get into retirement or financial freedom as quickly as possible. And how do we do that? So we have to calculate, we have to do the numbers. We have to use the rule of 72. And the rule of 72 states that if 72 is divided by the rate of return, which we just kind of went over some examples, that's going to give you the number of years it's going to take for you to double your money. So for instance, if you have a 10% rate of return year over year, then you do 72 divided by 10, and that'll give you 7 years. So at a 10% return year over year, it'll take you 7 years to double your money. It doesn't matter how much money it is. It can be $1,000, it can be $1 million. It's going to still take 7 years to double if you're earning 10% every single year. Now that's exciting, right? Because we can double our money multiple times, or at least one time, and a little bit more every decade, right? But how much more could we double our money if we would have just bought and hold Bitcoin, right? So if, let's just say, on average, so the average annual return, my goodness. So let's see, Bitcoin has an average annual return of 1,573%, right? So if we do the rule of 72 for that average, let's do 72 divided by 1,576. gives us 0.04. So we would have doubled our money in 0.04, a tenth. We would have doubled our money, let's say, in a little less than a month with that type of return, right? Because look at the percentage gains, right? So you all kind of get the picture. All right, I want to beat the horse all the way dead on that one. But I just want to show you all the importance of volatility, the importance of price swings going up extremely fast because it allows us to get that rate of return, which allows us to be able to double our money faster, which allows us to be able to retire or create that financial freedom a lot faster. Now, this is one thing I want to show you all as well is that there's something called a risk pyramid, an investment risk pyramid. Okay. And what this states is showing the different asset classes and it categorizes them based on risk, right? Based on the volatility of the asset class or based on the amount the price can swing up and down or how much money you can make or how much money you can lose, right? Do y'all get the concept of volatility? Okay. So this risk pyramid, they don't have cryptocurrency here, but cryptocurrency would be at the tippy top, in my opinion. It's extremely risky. And if you're investing in meme coins and NFTs, then you're investing in an extremely risky asset within a risky asset. So you got to be very, very careful. You can make an extreme amount of money, but you can also lose an extreme amount of money. Okay. So I'm showing you all this risk pyramid so you can conceptualize in your mind where cryptocurrency is and how you need to manage the volatility when you make profits in cryptocurrency. And also, if you don't know anybody who can help you figure out and navigate these cryptocurrency treacherous waters, because it gets crazy out there, you all can lose your entire life savings if you're not careful. If you need help figuring this whole industry out, visit WTFMA.com and send us a message in the contact tab. Whatever your question is, send us a message and we'll get right back to you as soon as possible to either answer your question directly in the message or to set up a free consultation cryptocurrency call to help you get any questions that you have clarified. All right. Now, so this risk pyramid is just me showing you how to go about taking these profits once you do get them, because as you see, I'm going to show you all again how these prices work. So as you see right here, the price of Bitcoin, once the price goes up, you all want to get out, right? You all want to sell. And you're not going to always time the exact top, and that's okay. But you want to get into a habit of selling as the price is increasing, selling a percentage, not all at one time. And as the price is going down at a certain point, you want to start to accumulate. You want to start to buy, right? But not all at one time. You want to take advantage of the trends. Okay. Now, since Bitcoin is at the top of the risk pyramid, once you're in profit, it doesn't matter how much profit, but once you're in some type of profit and once you sell, you want to make sure that you convert those dollars that you gained from profit. You want to put those into a lower investment class, a lower asset class on this risk pyramid. Okay. So some people like to put it in real estate. Some people want to put it in the stock market. In my opinion, you can do that. I personally, this next bull market, I plan on putting my profits into life insurance policies. I'm still learning about it, but my understanding is that you can max fund an IUL life insurance policy and it'll give you essentially risk free or extremely low risk returns, maybe 2, 3, 4, 5, 6%, depending on the market. And the benefit of that is you're not at risk of, let me stop sharing for a minute. And the benefit is you're not at risk of losing any profit or losing any of your portfolio value when the price of the stock market goes down, and you have the upside potential to gain a percentage or two on the upside when the market does do well. Now, The other caveat for that is you can also borrow from it or borrow from yourself, and you don't have to necessarily pay it back. And when you pass on, you can also transfer that value over to your heirs. So there's a lot of different benefits to rolling your profits, crypto profits, which are at the top of the risk pyramid, into something that's lower risk that gives you that truly passive income, like IUL life insurance policy. Those are just some tips and tricks that I've used. That's just the formula that I use for my particular profits, but you don't have to do that. But I just thought I would share that with you all. And just to kind of give you a brief overview of what volatility is, like I said today, I don't want to bore you all too much with the technical jargon of what everything entails as far as volatility, but it is important to understand the basics so that you'll understand to not be afraid when the price goes down, but to actually think of that as a blessing, to think of the price going down as a discount, right? If you see a nice car that you've been eyeing, that nice new Porsche or that nice Jaguar or whatever the car is, right? And let's say it's $50,000 and you see the price going down to 25,000, the price gets cut in half. Would you say, "Oh, I don't want that car now. It's half the price"? Absolutely not, because you still know that that car is the same car that you've been researching and it has the value that you want, right? And you're gonna probably try and snatch up a couple of cars for that price if you could, because you know that it's at a discount. It's a great deal. The same type of concept goes for investing. When you know that you've done your research, like I have, when you've done your research in a particular industry, whether it's precious metals, real estate, cryptocurrency, the stock market, whatever your specialty is, mine is cryptocurrency, hence the shirt. Once you've done a certain amount of research, you have that conviction, you have that confidence that what you're investing your money in, no matter what the price does in the short term, it can go up, down, sideways. It's not going to sway you because you've done your research and you know that the volatility long term is going to end up playing out in your favor, right? So you have to have that long term mindset and understand and not be afraid to ride the roller coaster of investing, because if you look at the Amazon chart, back when Amazon first started, it was at pennies. It was very, very cheap, and then it rocketed up to, hundreds, and I believe it hit even close to like $1,000 or something like that. So overall, understand that investing is a must. You must invest. You cannot save your way to retirement. You cannot save your way to retirement. So get into an investing mindset. Understand that volatility is your friend. If you understand how to play it, you must buy low and sell high, right? You must take action essentially. When the price is low, you have to buy it, y'all. You can't just say, "Oh, when the price drops, I'm going to get in," and then you don't get in, right? You have to take action. Action takers are money makers. So if you want to make money, start taking action if you aren't already, okay? And then you have to sell high or sell as the price is going up, right? And that's one of the tricky things to do because greed starts to set in. You start to calculate, oh, how much money you could have if only you just wait a little bit longer. If only the price goes up to the price that you want it to go to, right? Markets don't work like that. The market doesn't care what price you want to sell at. So you have to understand how the market works and you have to adjust to what the market is telling you, okay? So I'm not going to hold you out too much longer today, but I thank you all for your feedback. I thank you all for your comments and your likes, and thank you all for sharing this live feed. If you have any more topics that you want us to cover as far as cryptocurrency, please feel free to leave us a comment on this video. Hit us up in our DMs. All right. We'll be more than happy to cover it because now is the time for you to learn everything that you can learn about this new innovative space that is cryptocurrency. Because just think about it. How much money do you need? You personally, how much money do you need to retire? Not saying that it's a guarantee that crypto is going to help you retire, but honestly, what other asset class are you going to invest in that's going to allow you to be able to become financially free? Is it real estate? Possibly, but you have to have a a decent amount of capital or have access to a decent amount of capital to be able to make that work. Is it going to be precious metals? Probably not, because most people don't want to hold the precious metals themselves and they don't really understand how that sector works. It's a very niche industry, right? So, stock market, some people are afraid of the stock market. Some people think that the stock market is very, very toppy right now and that it could be crashing in the coming years. All right. So, if that does play out, what are you going to invest your money into? What else are you led to invest in other than yourself? In my eyes, cryptocurrency is the way to go. And y'all saw the numbers, the rates of return you all sell yourselves. Okay. So that's why we're here, to help guide you through these murky cryptocurrency waters. And once again, I open the floor up for anybody who wants to learn more. Feel free to hit us up on WTFMA.com. All right. So everybody, always keep in mind that WTF not only means what's the formula, but it also means winning takes focus. All right. So hope y'all took some notes today. Focus in on everything that we talked about on this live stream. And until next week, everybody, stay focused and keep winning. Peace.